Income Tax 2020 Tax Software Example Refund from State Income Tax. Come in, relax with Income Tax 2020. Here we are in the Lacerte tax software. You don't need the Lacerte tax software in order to follow along, although you might be able to get a free 30-day trial of it, and it might be a useful tool if you're able to get access to it. But we're going to be focusing in on the Form 1040. The software is going to allow us to kind of put the data input in more quickly and then jump back and forth as we work different scenarios. Our concentration then being in on the state income tax refund and whether or not it should be included then in income. So we're going to have our single filer, Eric Smith. Scrolling down, we're back to the 100,000 of wages. That's all we have here. We've got the 12,400 as the standard deduction for a single tax filer, bringing our taxable income to 87,600. We're mirroring that in our tax equation on the Excel worksheet. So we have the 100,000 income, standard deduction 12,004, the 87,600 our starting point. Now note, as we look at this worksheet, you might be saying, hey, look, the worksheet is not necessary. It's kind of redundant to be putting this worksheet in. But just realize that we keep on peeling back everything so that we can only focus in on one thing at a time. Right now, we're basically focusing in on the state income tax refund and nothing else. If you have a bunch of things that are combined together, then that's when the double checking of the worksheet comes into play. And that might be a little bit more clear as we do the comprehensive problems. It might seem a little bit redundant when you're looking at one thing at a time. And I think that's really one of the problems with making law, tax law in general, because when you look at one thing in isolation, you say, well, that's easy. But then when you compile a bunch of easy things together and you have a big mess of easy stuff, like a cluttered room, becomes difficult all of a sudden just because of the amount of what would be easy things all piled on each other. But in any case, we're now going to go back on over and we're considering our refund. So we're imagining then that we're receiving, or our client has received, let's say a 1099-G, and we have in box 2, we have a state or local income tax refund. Notice that the format of the 1099-G may not look exactly like this, but the layout in terms of the boxes will be the same. And you can look at the instructions related to the boxes if you have any questions related to them. So we have a state or local refund. So this is what will commonly happen. Now, if you have a continuing client, again, the software will kind of help you. But whether you have a continuing client or not, let's just assume that we're just going to take that data input and we're going to put it into the system. So if I was to do that, I would then say, okay, let's say that's going to be on Schedule 1, often is a schedule that will support the income line item. We have the additional income. We see tax refunds, credits, and whatnot. I would then jump to that screen using the software. I'm going to say, let's jump over there, and I'll just do the data input right there. There's a schedule. There's a 1099-G. That's the form I'm looking at. Let's put it right there. So I'm going to put it there, and I'm just going to imagine it's going to be 1,000. So 1,000 refund that was on the 1099-G. We put it right there, and then when I go back over, my imagination, if I'm just doing this by rogue, I'm just entering the data into the system, would imagine that 1,000 should appear here. And it doesn't. It didn't appear there, right? And it didn't pull over to page 1 of the 1040. And then usually, if you're kind of new to the software or to this process, you're going to say something went wrong because it's a 1099. That means there's income. That means it should be included here. I put it in the proper field. I jump to it. I see where it's supposed to go in the form. It's supposed to go right there. And then I put it into the data input field, and it didn't go right there. Why didn't it go right there? Because it's possible that we didn't get any benefit from it in the prior year. And it's quite likely this time, because remember, if I go back to the first page of the 1040, if you're down here in the itemized deductions and we're imagining the prior year, the question is, did they take the standard deduction or did they itemize? If they took the standard deduction last year, they didn't get any benefit from the deduction, and and therefore we wouldn't include the refund in income. In other words, if we're only putting it in income if they got a tax benefit from it last year. So if they itemized last year, then they might have got a tax benefit from it. So for example, if we're imagining this was the prior year, 2019 return, Schedule A. So if we looked at their Schedule A in the taxes you paid section, we could have state and local taxes, which could be a substantial amount of deduction that could be included, especially if you're in a high tax state like California or New York. So then we're going to have the state taxes, and if you itemize, then you got a benefit from the state taxes. So if we're imagining 2019 return, and they have this state taxes that they got this deduction for, meaning they got a benefit in 2019 for federal income taxes, because this itemized deduction represents federal income taxes, which will be a deduction for federal income taxes in the itemized deductions here. Then they lowered their taxes. They lowered their taxable income last year, and they got a benefit from it if they itemized in the prior year, and they took the state tax deduction. And then they got a refund, which means they deducted something on state taxes which they didn't really pay because they overpaid it, and then they got it back. Well, what do we do in that case? Well, the law could have said you need to go back and amend 2019, which would be the most proper thing to do, right? And then go back into your itemized deductions, and then do not include the amount of taxes that you didn't actually pay. Don't only include the taxes that you owed, and not including the refund. That's one way we could do it, but that would be burdensome to do. So instead they said, okay, we're not going to make you amend the prior year. We're going to basically say in the current year, whatever refund that you got, you have to now include it in income. You got a deduction from it last year. You're going to have to include the refund amount in income. So that means you'd include it in income only if you got a tax benefit. You would only get a tax benefit in the prior year if you itemized. So bottom line then, if you're working with a tax client in the current year and you had used the same software in the prior year, then you would have pro forma'd it forward from the prior year, and the software will help you out with that kind of rollover. The software will know whether or not they itemized last year, and it'll basically be able to determine how much of the state tax should be included, if any, in the current year. Now, if you're doing a new client and they weren't in the software last year and you didn't roll it over, then your questions are, well, should I possibly, and this is always the question, should I put it into the prior year tax return and then pro forma it forward? Meaning, should I take the paper return for 2019 they gave me, enter it into the prior year tax return, and pro forma it forward? A lot more work, but it might be worth doing if you want to establish a long-term relationship with a client and make sure that you have the taxes correct as you start moving forward on it. So the basic rule there might be, well, if it's a really basic return, then maybe I don't need to do that, right? Meaning if they didn't itemize last year, then I possibly don't need to put the information in the prior year return and roll it over. But if you have itemized deductions, then that probably means the tax return is to the level of complexity that you might want to then enter the data fully into the prior year tax return, match it out to the paper return, pro forma it forward, let the tax software do the calculation as to the determination of how much the state taxes should be deducted and any other kind of rollovers that might be affected. So that's kind of the general rule that you might want to, kind of think about, right? If it's a standardized item, the deduction, then possibly I don't need to go through the trouble of entering it into the prior year. If it's a new client, if they itemized and it's a complex return and I want to hold on to these clients for a long period of time and get a feel for exactly, what is included in their return, it's probably good practice for me to enter their tax return into the prior year software and then pro forma it forward. It'll make me easier to know what to expect in the current year, rather than just kind of glancing at the tax return, right? But in any case, we're not going to do that here. So we're going to say, okay, what if I need to include that amount in income? So it's not included here. And I'm going to say, I've determined that they have itemized last year and it should be included in the income here. So I'm going to go, all right, well, then if I go back to my detail, then I got to go basically down to the worksheet down below. And Lacerte has this little worksheet, and this is going to kind of help you out to determine it. So they got the refunds taxable in 2020 worksheet. Now, so this worksheet can help you to determine if it should be included in income and the amount that should be included in here. So we could say, did we itemize? We would check that off. If we did itemize, and we can go down here, we can enter the adjusted gross income, the state income taxes from Schedule A, the allowance. Now, I'm not actually going to do this, but you could see basically the calculation for it. And just to give you an idea of what we're trying to determine here, remember the amount that would be deducted, it would only be included in income if they itemized last year. And then we're going to take the lesser of the amount received, the amount deducted on Schedule A in the prior year, or the amount by which the itemized deductions exceeded the standard deduction. So you can see in order to do that, you'd need basically this information for the software to do that calculation. You'd need the state income taxes on Schedule A last year, the allowable general sales tax deduction, state and local estate taxes, state and local personal property taxes, we have the amount from Schedule A, lines 1, 6, 10, itemized deduction, base standard, and so on and so forth. Now, again, it would be a lot easier to do this if you itemize. I would simply enter the entire tax return into the prior year tax return, matching it up to the paper tax return if that's what I have, and then pro forma it forward, rolling it forward from the prior year to the current year so that this information would roll over automatically and that determination would be made. Now, if the other way you could do that is to use an override. So one way we could do it is I could say jump here and I want to go to the overrides. So overrides means that I don't want to put all the data in. I know what the determination will be. Anything with an O is an override field. So I'm going to say, hey, the entire 1,000 needs to be included. I know that's the case. I just want to basically force that in the software instead of going through a worksheet in order to make that determination. I know they took the itemized deduction last year, and I know they got a benefit from the tax. So I'm just put the 1,000 here, and then it would then pull over to the forms. So now it's pulled over to the forms. It's on Schedule 1, which is now bolded, meaning it will be included. And then that's going to pull over then to the 1040 page 1. So 1040 page 1, we now will have the 1,000 and the 1,000 from the other income from line 1, line 9, or Schedule 1, line 9. We're at the 101, the 12,400, giving us that 88,600 here. And that's basically all we need to check for this amount. If we double check that in our worksheet, we'd say, okay, now we have income, which I'm going to say was a refund. So I'm going to say down here, we'll have a refund of 1,000 on the refund, bringing that over. That brings our line 1 to 101,000. So that brings our taxable income to the 88,600, which matches out here at the 88,600. And then, of course, the tax can be calculated on that. So again, general rule, the refund from the state is only going to be included if you itemized and got a benefit from it last year. If you have a new client, then if they didn't itemize last year, maybe you just enter it into the current year software. If they itemized last year, you might want to get a copy of their prior year return, actually enter it into the 2019 Lacert software, and then pro forma it forward. That would be the best way to do it to be the most sure that things roll over correctly, and to get a feel for a more complex tax return for a client that you're hoping to have a benefit from, because possibly there'll be a higher profit margin if it's a higher income client. Then you want to do that right, get a feel for it, and then enter everything in the current year, and then everything should be pro forma in well. Or you can basically enter the data directly in and make the determination as to whether or not the state tax should be included or not by seeing whether or not they itemized last year and whether or not they got a deduction from it. If they itemized last year, they most likely often will have at least part, if not all, of the state tax included. If they did not itemize in the prior year, then you're not going to have to include the state tax refund in the federal income tax return.